Good morning, everybody. It is July 12th, and this is the weekly review where we take a look at what happened last week and what it portrays or tells us about the coming weeks. In terms of the markets and what took place last week, of course, a huge volatility. As we know, if we take a look at what the charts look like, we all know that it was a lot of volatility last week, a lot of ups and a lot of downs. And in the end, we basically went nowhere. So we're up, we're down, and we're flat on the week. So not much change in terms of the numbers, but I do think we had some changes in terms of the content and direction of the market, and that is I think that the ranges have held and have been defined in Europe as well. So let's take a look at all of this. Still there's little room left on the downside. That was the case last week. If we're going to break to the downside, it was going to happen, I suspect. Last week it didn't. The sellers were left empty-handed again. I suspect that's going to give us a bias to the upside this week. We had that huge pressure off the Greek, the disappointment on the election vote. Yet on Monday we didn't sell off that bad, and we still had the collapsing of the Chinese stocks. And so Monday and Tuesdays, Wednesday, all that volatility was off of these two things, kind of trying to figure out, what was happening, what was going to happen, and what was going to transpire in terms of the overall direction. In the end, the European markets expanded back to the downside, and they did their range boundaries finally. And so let's look at those first and see what we're talking about. And of course, when we're talking about Europe, primarily we're looking at the CACs and the DAX, France and Germany. Here's the daily chart on the CACs. You can see the big bounce up, but it's really on the weekly that you see the key signatures. And that is that we traded into, this big breakout bar, right? This was the breakout on the DAX, on the CACs. We trade right back into that area, holds, volume lighter, right? That's a reversal. That, I believe, finally gives us that range. And we've talked about the range build out multiple times. Let me try to lay it out here. And that range build out, when you think about it, it could go farther, but at the same time, the test that we just saw more than likely has defined that entry. I mean, this was the area that potentially we could get back to. The retest regen is off of this area, but that's already been retested and regen before, so it necessarily doesn't have to, do that again. But this range build out, at this point, I believe it's shown us that the buyers are down here. They do want to buy into this bar. If we get even deeper, I suspect they'll buy that as well. But at this point, when you have that kind of a test, you can't break into that bar and stay into it. That says you're going to get a bounce. We already got a big bounce. Now the question is, where can it bounce to? And if I come back to that daily chart and look at it again, I suspect we finally have broken enough to the downside that we could get a big bounce, and that we can take these all the way back into these big bars that we see like on April 30th, for example. So I suspect there is more upside still. If we look at the daily and look for areas, this gap area, these volume bars over in this area, all of that looks like places that we should expect this market to try to trade to. And so I would be looking for a further bounce. Now the risk is that we get some sort of a fill first, right? We already had a huge bounce off the bottom. So we get some sort of backing and filling before, right? Setting up some sort of an ABCD structure to take us up higher. It doesn't have to be the case that you set up an ABCD now to get up here, but it certainly could do so given the big move already. You've got the ECB rate decisions, talk this week. You got a bunch more Fed talk here domestically, but Europe, I still believe, is the driver, as I've believed and I've communicated for a while now, and I suspect it's going to continue to be the driver. If we look at the DAX, the DAX basically has the same setup. You can see it here on the daily chart. If you flip to the weekly chart, it too came back into that January 19th bar. It too doesn't have the volume. That suggests a bounce, and that bounce could take us all the way back, at least halfway of this decline. And if we just run the numbers, 12,390, we made it down to 10,6. So it's almost 3,000. 15 back up would take you to about 12.1. And so you could see, not 12.1, what was that number? It's about 2, it's about 11. So about 11.7, 11.7, 11.8. Could easily get back up into that numbers. Swing point high here is 11.9. So a test of the swing point high probably isn't out of reach. I think we could see potentially that kind of a bounce. So that's the German market, the French market, and those, I believe, are the main markets. Now, we know that we had big sell-offs elsewhere, like in Shanghai, and this was a tremendous sell-off, right? 35% or so. You got a big bounce off of it already. These are just setting up the ranges. Remember, Europe was setting up the ranges for the past 2 months. Well, now you're just finally getting the start of the setup of the range in the Asian markets. On Shanghai, the bounce could take it certainly back into the retest regen zone. That's still another 5-10% up. And so when we look at this bounce, which really is just a bounce so far, it still could carry quite a bit farther into that 4,100, 4,200 area. So that's on the Shanghai. If we pull it back, look at it on the weekly. On the weekly, you left volume, you left it on the daily too. You tested into the swing point high. That was the first trip back after more than 6 bars. And when you see something where you come back after more than 6 bars, you test into it, probabilities are like 90%, 91% that it is going to bounce. And that's exactly what it did. Now, the issue, of course, is the volume on the way down. So that means that more than likely it is going to test down there again. It's not over. And if you look at the swing points here, they're up around that 41, 4,200 area as well. So I think the 41, 42 is where you have to think this thing can trade to. And that's where we should be looking for a potential retrace to start on the way back down. So that's the Shanghai. If we look at Hong Kong, we also had a huge spike down in Hong Kong. And that spike down, if we look at it on the weekly, let's look at it, comes down, and it's pretty amazing to me. I was amazed Friday when I saw the fact that this thing was going to hold on the bullish retest regen off the breakout bar. Now, again, huge volume, that means it's probably going to test down again, but for it to hold this area after this kind of a sell-off, it really is amazing, and it's a testament to the power of these retest regen zones. As I've said many times, if you go more than 6 bars, probabilities are very high you're going to hold. And that's exactly what it did again. Even in a case where you had extreme pressure as a result of what was happening both in Europe and in China. But it does hold. We'll build out a range now, and that range build out is something we should try to trade because the percentages here are huge. So in other words, when it comes down here to test, again, that test is probably going to be a buy, and it's probably going to be a good buy, and we should be looking for it. Unfortunately, we got stopped out almost at the bottom of this on that trade that we had on, given the size of the volatility that took place. The last one that we should look at overseas is the Nikkei. Nikkei also high volume low. It holds the lows, And if we look at it on the weekly, it was a test of this swing point low and a test of that swing point low. And even though they held and volumes were slightly heavier this time around, it is probably going to hold, build out a range, right? But it is going to test those lows again, most likely. So Asia, all of them seem to suggest that they are going to test lows again. And if they are, what are they doing? They're building out their ranges, just like we've already seen take place in Europe. So if I look at that in a broader perspective and I think about, okay, what does that mean to the U.S. markets? Now, the U.S. markets are more tied to Europe than they are to Asia. So if the U.S. market, if the European markets continue that bounce, I expect the U.S. markets are going to do the same. Issue is going to be is that if you look at the whole world, U.S. markets are still not going to be able to push that much higher, break out of their ranges to the top side when there's that much weakness still in Asia as it builds out its range. So to me, the overall picture for the U.S. markets, range bound still, even though it's in the top range. Let's go look at that. And so if we look at the U.S. markets, and I'm going to use the S&P 500, I've got it on the weekly, kind of got this top range that was the breakout. It held up there for a while, but it's been testing into this lower range for a while, of the top two. But overall, I mean, that really is, if I take and draw the whole thing, right, this area, let me grab my box here symbol. If I look at it, this whole overall area is like that, right, with another range up underneath it. They could trade down into here and then down into there and then down into this one, right? So we have kind of these four ranges that are set up. If I make them equidistant, do them correctly, you'd see it more like about like that. And then this one, of course, would be down a little bit. But we haven't tested into this second big range if we have the four quadrants. And the fact that we haven't tested into this, is a testament to how strong the market still is. It's a big consolidation, and I suspect this big consolidation up here is going to continue for the reasons I just stated. So we test down, we try, and if we clean this up and look at it, we try to test into these lows, and the ones I'm talking about are right here. So we're testing this low, trying to break it. We're trying to get into this low and break it. We test both of them, and what do? We end up with a hammer reversal, and we hold higher. Now, on the S&Ps, that hammer reversal is a result of all the issues in Europe, but yet it holds. And as long as you hold, and as long as the overall direction continues to be up, which it still has been, right? I mean, we're sideways right now, but the overall direction's been up. You have to view that as a consolidation. And if you have consolidations in an uptrend, you have to expect that this consolidation eventually will do what it's always done, and that is it will break to the upside and continue. So at this point, I don't want to dismiss the fact that, there are issues out there. There is the potential, and I don't want to lose, sight of them. There is the potential that a break of these swing points will lead to a test of these, a potential break of that will lead to a potential test of this, and that on the longer term basis would be a break on that time frame. Those are all still out there. They're all still possible. It is possible that we're building out a top, a long-term top. I mean, that's very possible. I can look forward and I can say, hey, what if the economy gets bad? What if we really do get bad numbers? What if we go to negative growth? What if we have a recession? This market's going to top if that happens. The evidence isn't here yet to support that conclusion yet. And so we shouldn't jump to that conclusion until we get more evidence. And at this point, we haven't even broken, on the intermediate term time frame to just sideways, much less bearish. So let's not get bearish until there's a reason to do so. All right, let's go back to the thoughts here. So I kind of jumped around. I went through the whole thing. We've got earnings this week. That will tell us a lot. I suspect they are going to be better than the market is pricing in. I believe that's going to continue to put upside pressure on prices, along with the bounce that's taking place in Europe, and probably the continuation of the bounce in Asia before it comes back down. Positives, if we look at the technical positives, we have in Germany, France, the big breakouts that we just talked about, the Hong Kong markets holding. We had the bullish retest regens on the NASDAQ and the Russell again. Let's take a look at those. And we're talking about the weekly charts here. So if we pop to the weekly, and let me grab the weekly, you can see this swing point high. Was it the NASDAQ or the NDX? I think it was the NDX. I think I did the same thing I did last week, and that is, yeah, it was the NDX. So the NDX tests into this swing point high, and it holds. And this is the second week it's held in that area. So twice now holds. That's a bullish retest trying to regenerate higher off this prior breakout, right? It's a lot of testing up here, but still hasn't given it up and hasn't shown us that it's going to give it up at this point. Similarly, on the Russell, you've got the same situation, and that is that even though it's fresher, right, the Russell has a breakout here, holds both weeks now on the test, and a little hammer reversal. Again, more volume, but still held. So those are really positives on the domestic markets. The swing point low on the Dow Jones was tested and held. The listed indexes hold on the weekly time frames. And so what I'm talking about here was on the weekly, if we look at these, they held those swing point lows that we were just talking about. The Russell actually is suggesting that it's going to go upside again. It's been showing that all week into the week. It's been the leader. And the reason I say that is because the Russell actually got back to the big, this bar became the wide price spread bar. That's the Tuesday bar. The Russell broke back over it, right? Gets over the top of it here, which suggests it is going to test higher. Where is it going to test to? I suspect it's going to try to come all the way back into the top now because it's into this breakdown bar. I suspect it's going to try to come back to the top of that breakdown bar, and you're going to see all the indexes trying to work higher, just like this one is already indicating it's going to try and do. And matter of fact, if you look at the NASDAQ is right at that bar trying to get over it, and it looks to me like it's going to test into it again this week and more than likely get over it. It also would be going after the June 29th high, which is the breakdown bar. They're all going to try to get to the highs of the June 29th bars. Emerging markets. This was an interesting one because I didn't see, let me go back here. Where is it at? The technical, there, emerging markets. I didn't see on the emerging markets that much goodness, right, until this week. And what I saw this week was kind of surprising to me. Here's the daily little bounce, right? But what I saw this week was that it tested into this low on December of last year. The low is 37.23, got underneath it, has less volume, right? So you test into it, you go back over it, you get a hammer reversal. The EEM, the emerging markets, look like they also want to trade higher, so that's a good thing. And the dollar's still range bound, which is also positive. On the negative side, we actually had more volume on the S&P. So if we look at the S&P on a daily time frame, it did not test that low. That low is here on July 7th. Higher volume, no test. That suggests that it's going to try and hold for now, but we could get another test at some point down the road as a result of it. Now, the divergence is that we don't have that elsewhere, and that's a positive. Technical, the Hong Kong, we talked about the first trip back being bought, yet there's heavy volume left. Same in Japan, and the bonds continue to struggle. If we look at those bonds, I mean, that's a tough setup, and I'm beginning to wonder, what is the bonds telling us? And is it really that, the markets themselves are in trouble and the bonds are trying to forecast that? Or is it telling us that there's just a different makeup in the type of trading that's taking place in the bonds as a result of all the quantitative easing that's happening not only in the U.S. but happening in the world? Very tough, down. I mean, if you just look at this and just draw your ABCD structures on the way down, right? They just continue, and this one actually goes back up to here. They just continue, to fulfill the moves, get bounces, right, and then start them again. This one hasn't fulfilled, but it looks like it's going to try to work lower again. And inside of it, you have a little small ABCD structure that may trigger as well to take you down to these lows. So, I look at the bond market. Bond market looks tough. Looks like it's going to continue to be tough. If you're playing that market, you almost have to be on the short side right now. Long term, if I pull over the monthly, it broke underneath some support areas into this big bar, and now it's coming in to test the high volume bar from 2011 when we had all the turmoil in the market and we had a big shot higher in the bonds as a result of it. That number is 112.14, and we're sitting at the low last week was 114. So we're only 2 points away, to getting into this bar. If we're going to see the bonds flip around, I suspect it's going to be off a test into this area. That's right about there. And so I suspect that, if we're going to see some sort of a, large move back the other way, it's going to come off a test into this area before it's over. So that's the way those look. Looking elsewhere, what do we got? Fundamental positives. China, they clearly signal that they're going to do whatever it takes. I mean, look at all the measures they rolled out to support the stock market this last 2 weeks to make it turn. The European economic data continues to look good, and I suspect that's going to continue for a while. We're going to hear from the ECB this week. Earnings, they're likely to be better. I've already told that, and it's, the result of it's no negative effect on the dollar. If I look at the fundamental negatives, even though the situation in Greece's being bought, there's still no done deal there. Yellen also suggesting rates are going to rise as early as September. And then the other thing we're starting to see, and we've seen it in the charts already, the technicals showed us that something was wrong in India. The Indian growth continues to slow, and that's a negative. That's one of the hot spots. And it's same thing in China. I didn't put China here, but the Chinese growth also has been slowing for a while and continues to just bump along right now. What would I monitor and expect next week? If I look at it, I expect the NASDAQ to Russell to lead us back. I point those out on the chart. I think that's what we should be expecting. I think we have to monitor France and Germany to see if we get any kind of pullbacks in those gaps I showed you. And I also think we got to monitor Asia because, they're starting to build out the ranges. They're going to probably come back down and freak everybody out again because they're large ranges and they're fast moves. And so whenever this bounce fails, you're going to get a faster move to the downside probably, and that's going to worry folks again. Monitor the earnings. I think the question is will they buy them or will they sell them? My suspicion is they're going to buy them, and they're probably going to do that in the first couple of weeks, which they start Tuesday in earnest, so that will be the trades there. On the short-term sectors, I think they're very positive. And this is something new I thought I'd start putting in here is to look at each of the sectors and kind of put a weighting in terms of what are they trying to do. We got 4 of them trying to trade higher. We got most of them sideways to higher, and we got the one lower, and that's the stocks. So that's the way it looks and what I'd be monitoring in the upcoming week. If we look at the economics and the earnings we've already talked about. I suspect we're going to see positive result to those. They'll start up in Tuesday. We've got Wells Fargo, J.P. Morgan, CVX, Johnson & Johnson all this week. So a lot of big names there, mostly in financials, which should do pretty well. ECB decision on Thursday, and we got a lot of Fed speakers with Yellen twice. Some industrial production numbers, and there's a beige book on Wednesday as well. If we think about it in terms of the bottom line, what do we know now that we didn't know last week? Last week we knew we had probably a lot of pressure that could potentially hit this market. We had no room to give anything up, And believe me, they hit it. They hit it day after day after day trying to take it down, and they couldn't. The sellers came up empty one more time. We have seen that so many times, and it continues to be the case. And when you see that sort of situation where you should get, selling, you should get lower prices, but they can't stick, they're going to turn around, they're going to try to take it back the other way. And I suspect that's what we're going to see. So once more, the buyers felt it was an opportunity to buy, not to sell. They came in. It's been that way a long time, continues to be. If this is a major top forming, and it could be, right? Clearly, we're going to have to see a change in these longer-term trends. And we're talking about the intermediate and the long-term trend itself, but in particular the intermediate, where the sellers really become more aggressive, and they haven't been able to do that so far. So most likely this is probably a consolidation, a range build out, and it's going to continue that way, and especially in Europe, right, where we see those in continuation and eventually a push back higher off the longer term trend. So this coming week, it's likely to remain somewhat volatile, but I think we're going to have an upward bias. If we look at the portfolio, it was a tough week. We ended up with, down to 39%. We were about 50, I think it was 51 or 52. And that was mainly because we had to take stops primarily on all the Asian ETFs. We did it on the DXJ, on the EWH, and on Asher itself. And so, China let them down. They put big pressure in those markets, took our stops out, and then they flipped around. So, the good thing is that we probably get another chance as these ranges build out to come back into these. But short term, it's painful. It's especially on the EWH. We had a good position there, and shouldn't have been that volatile, but it was, and that's what sometimes happens. I believe, on the positive side, we added Apple. I think that's a good thing. We took some partial gains elsewhere. Looking at these particular stocks, Amgen, it's got this high volume low out here, and that's a little bit concerning because you don't want to see high volume lows. You have this one, you didn't quite test it, and now you're getting a bounce. At this particular point, I'm a little more concerned about Amgen than I probably would be normally. We have a high volume high, which is what I kept looking at when I was looking at trading this, expecting that it was going to try to trade back up into that area. Now you get the high volume low, so it's a question, okay, are you going to get back up there first and eventually come back down here? Or is it going to be something in between? We've got lower highs. There's a lot of stuff working against this. What I'm going to do this week is watch this area right here. Can you get over it? Can you get up here? If you can get up there, then that's a different story, right? That means it's going to go back and try to test the highs. If we can't, then maybe we have to take out that last buy that we didn't get a good price point on and look at it maybe a little bit lower. But that's Amgen. Doesn't look too bad. Looks all right. Pan W, great stock. We took some profits there. Should add back to it when we get a chance. DGZ, we took profits on the short side. We probably want to add some back. Apple, I wanted to add it on the 119, 120 area. Fortunately, we got down there. We were able to add it. I think Apple's probably going to try to make that run into the earnings season. The other things I'm going to try and do going forward is I'm going to add a section in here on potentials, and I'll play with this and try to figure out how to do it so it's more useful for you. Maybe I'll throw some charts in here. I'm not sure, but I want to look at those areas that are promising that you could look at yourself, not just depend on me to come up with a portfolio for you. Home builders is one area. So if I take and look at some of these areas, and let me grab them for you, there's some pretty strong charts here. So if I look at the home builders, for example, on the daily, you've had stair stepping on the way up, doing ABCD structures. They continue to look positive to me. They had that pullback off the last earnings season, but since then it's been trying to work its way back up. You get pullbacks and little ABCD structures to the downside inside of it, right? But then it turns around, does it back to the upside, and so forth. So I don't know that this is a negative. I like the way this thing's setting up. I'd like to see it get over some area that tells me it's probably an ABCD back up instead of down. But the home builders themselves, they look pretty positive, and we look at it on the weekly. You can see it looks very positive on a weekly time frame. Tries to break out. It's doing the retest regen. Looks like it's going to hold. So this is one area that might be a nice potential for someone to take a look at. Another area that I noticed that shows relative strength is just healthcare in general. And inside of healthcare, the drug companies look pretty hot. So if I look at, say, the PPH, for example, to get a feel for what that sector looks like, look at the big pop up on Friday off those lows, but you pull this back, look at it on weekly, it's just consolidating at the highs. So a very strong sector there in the drug companies. And then finally, the Asian European ETFs on pullbacks would be a good area. So in all, the week was a good week in terms of telling us something, and what it told us that this market's still bullish. It hasn't changed. It is also still range bound. That hasn't changed. And I suspect both of those are going to continue for the foreseeable future, and that's how we have to probably try and trade it. All right, thanks. As always, if there's anything I can do to help you, give me a holler. And until next time, take care.